Let's stick with the Fed. The hope is out there that we will see 2 interest rate cuts south of the border this year. However, tariffs are hanging over the market and hanging over the economy. Let's get the take of Carl Tannenbaum, Executive VP and Chief Economist at Northern Trust and former Senior VP at the Chicago Fed. Thank you very much indeed for joining us. What is your read? Do you think Powell went to great lengths to be neutral yesterday, neither hawkish or dovish?
Well, first, I'm delighted to join you from the soon-to-be 11th province of Canada.
Oh, good one. Thank you. Do you mean, where are you? What state are you in, if you don't mind me asking?
Well, if we're just a province, it really doesn't matter what U.S. state we're in. We're all going to be one when we join with you.
But you're in Indiana, are you?
I'm in Chicago.
Okay, yep, okay.
So, but with regard to the Fed, listen, the chairman did have a difficult chore yesterday. He always has to represent the views of 19 separate participants, and all of us tend to look at their consensus forecast as the Fed's forecast, which is a bit of a mislabeling. He has to explain the diversity of opinion in an equanimous way. Mm-hmm. He also has spent the last few meetings assiduously avoiding any discussion of tariffs, both to remain apolitical and also, as he noted, because the exact contours of the tariffs were not yet known. Well, as he arrived in Washington, or as everybody arrived in Washington this week for conversation, it was clear that tariffs were no longer a theoretical construct. They're in place today. If pressed, I think he and frankly I would say that the risk is that tariffs would get worse before they hopefully ultimately will get better. And you have to factor that into your forecast. As was noted earlier, not just was growth downgraded and inflation raised, but the risks that they would continue in those directions was very, very high. And so over and over, the word uncertainty was used. The man sounded like he was ready to be patient and awaiting some resolution of all of this uncertainty before making the next move. One thought, in the United States, the impact of growth of a prolonged tariff struggle, which wouldn't be pleasant, will not be fatal. For countries like Canada, which exports 75% or so of their exports to the United States, the impacts are more pronounced, and therefore the direction for the Bank of Canada is a little bit clearer. They've been moving much more aggressively with rates, and frankly, they published a paper at an earlier meeting this year that justified why they were doing so. For the Fed, I think they'll be able to wait a little bit longer. Our own view is that another cut won't be forthcoming until September. And
I guess I know this is a trite point, which never stopped me before, but on a per capita basis, the trade war is far more dangerous for us in Canada.
It is. And I think in the long run, we'll look back on this as being very unfortunate and unnecessary. We have struck 2 free trade agreements in North America, the first in '94 and then the second, an updated one in the first Trump administration. I think the negotiations that led up to them were balanced. They paved the way for supply chains to be resilient and grow within our continent. And it is challenging, I think, both to economists and also to business people who have constructed operations in Canada, the United States, and Mexico to deal with the seemingly random changes of the rules. Earlier, you were talking about sentiment. Consumer sentiment often is unreliable. People say one thing and then they do different things with their wallet. But business sentiment, which we're also seeing under some stress, I think is more impactful. One gets the sense that leaders of North American companies are spending more time in their war rooms trying to diagnose the latest tariffs and executive orders than they are in thinking about the opportunities of growing their business in the region. And that's not going to be helpful to economic growth.
I'm just trying to think just about Trump's apparent animosity to the idea of an independent Canada. The Washington Post looked at this, and apparently a lot of Republicans are saying it seems to be all his idea.
Well, I'll just say that many negotiations start with extreme statements and positions, but fortunately, end in a more balanced place. That is certainly what many of us in the United States are hoping will happen in the discussions over relations with a country with whom we have had friendly and immensely productive relations for a very long time.
It is a tragic story. Leave us with a final thought. And I know this is a complex issue, and of course I only give you a limited amount of time to answer it. But there is talk that the administration would like a significantly lower U.S. dollar to improve America's trade balance. Do you think there's anything to that?
Well, they've gotten some of what they've wished for in the last few weeks, but they want to take it further with what is being described as the Mar-a-Lago Accord, going back to the Plaza Accord of the 1980s. The new chair of the Council of Economic Advisors, Mr. Miran, has a paper on this. It goes a long way and has a lot of details to it. It would be a pretty radical rethinking of the role of the dollar. I'm not sure, just on the surface, that we want to invite people to question the role of the American dollar as the world's reserve currency. So let's stay tuned to that as well.
Thank you very much indeed, Carl. And of course, I haven't had enough caffeine today. Chicago is in Illinois. I do know that. Sweet home Chicago. I remember being there with my dad many years ago, and the architecture really is striking. A wonderful city. Thank you very much.
Come on back. We need the business.
I know, but I'm wary about visiting America. I don't know. Am I going to get picked up at the border? I think people are apprehensive. Oh, I'm sorry, Carl. Okay, I'm being alarmist. Thank you very much indeed. Carl Tannenbaum.